Good morning, students. We are again today continuing with the same chapter, number 27, Limited Company Accounts. Today I'm going to look a bit deeper into how to make the company accounts, the financial statements of a limited company. Now remember, grade 12, all you have to do is learn how to make the trading and profit and loss accounts and the balance sheets for different types of businesses. Okay, we did the non-profit organizations, we did the partnerships, now is the time for company accounts. Okay, now the financial statements of a limited company are almost made in a similar manner as that of the sole traders and partnerships. So it means the format that you learned, sales less cost of sales for gross profit, and gross profit minus expenses gives you net profit. So trading and profit and loss account is almost the same, and the balance sheet is same for all, because balance sheet is a depiction of assets equals liabilities plus capital, that is accounting equation. So trading and profit and loss account is made in the similar manner as that of sole traders and partnerships. However, there are two new additional types of expenses you should be familiar with, because with a company status now you have two new kinds of expenses. Previously, where you only used to have wages and salaries, now you have director's remuneration. What is that? A director is appointed by the shareholder of the company, because since the shareholders are the owners, they are not running the company, they are only investing their money. So they hire directors, they appoint directors to run the company. So when you are hiring someone to run your company, it means they are an employee of the company. Since they are an employee of the company, they need to be paid a salary. So the director's pay is known as director's remuneration. And these remuneration can include the bonuses, their packages, everything, the allowances they get, everything is included in there. So director's remuneration is the director's salary, one expense. The second one is debenture interest. You already learned about debentures and debenture interest in the previous recordings. So debenture interest is the interest paid on debentures to the debenture holders for lending money. So if a bank is giving you a loan, they want their interest payments annually on time. So these are the two new types of expenses which will be a part of your trading and profit and loss account. And now moving forward, okay, the appropriation account. If you remember, in the partnership businesses, once you were done with the profit and loss account, we made a profit and loss appropriation account. This was an account where you basically distributed the net profits between the partners. Now remember, in a company, you do not have partners, you have shareholders. So an appropriation account of the company will show how the profits of the company are to be taxed and the remaining balance distributed. Remember guys, you pay a corporate tax on your company profits. So after paying the taxes to the government, the remaining balance will be distributed between the shareholders. So the shareholders will be receiving your dividends and transfer to and from reserves, retained earnings. Okay, so with your profits, what do? We give them out to our shareholders as profits, which we call dividends, and the remaining balance of the profit we keep in the company as retained earnings. This is the amount of money we are going to use to expand our company operations in the future. Moving forward. Okay, now let me show you one of the exhibits from your book, 27.2. If you look at the information now, Delta Limited has a share capital of 200,000 ordinary shares of $1 each. If you remember, I told you a share can have any amount of nominal value. It can be 50 cents, or if in UAE terms, it can be 50 fils or 1 dirham, a value of one share. So since we're talking about the pounds, let's stick to that. So the company has a share capital of 200,000 and one share is worth £1. And they have also issued 100,000 preference shares of £1 each, and with the preference shares there is a 5% figure given here. What does this 5% show? This 5% is the rate of dividend the preference shareholders will be getting. Remember the difference between preference shares and ordinary shares? Ordinary shareholder can get any amount of profits. depending on how much amount of profits the company made. And preference shareholders get a fixed amount of profit as dividend. So their dividends are going to be 5% of 100,000 every year. They cannot get a single penny more because this is one of the features of preference share. You get fixed amount of dividend every year. So these preference shares are going to get 5%, which is 5% of 100,000, 5,000 every year. Okay. Now the data here is net profits for the first 3 years of business are given. 2008, 2009, 2010. These are the profits you made. The transfer to reserves are made as follows. So out of these net profits, how much did you transfer to your reserves? In 2008, nothing. 2009, we transferred 20,000 to the general reserve. And in 2010, fixed asset replacement reserve, we put in 25,000 there. So let's say a company was planning to replace one of their fixed assets. So they made a reserve for it for 25,000. So it means out of the profits, they put 25,000 in this special reserve account. And out of the profit of 40,000 in 2009, they put 20,000 in the general reserve. Then dividends were declared for each year on the preference shares and on the ordinary shares. So it means each year, both the ordinary shareholders and the preference shareholders got dividends. Now, in 2008, how much did the preference shareholders get every year? Yes, they every year are going to get a fixed amount, which is 5%. So this percentage given here is for ordinary shares. 2008, ordinary shareholders got 6%. 2009, they got 8% of what? Of their investment. And in 2010, they got 10% of their investment, which is 200,000. Now let's see how they devised the accounts. So, profit and loss appropriation account for the year ended 31st December 2008. So, the net profit for the year was 35,936. It comes from here, 35,936. If you look at it, it would look familiar to you as to what you made in chapter number 26 for the partnerships. Now, from the profit, now it is an appropriation account, right? So appropriation means you're going to divide this profit into something. What are you going to divide it in? Dividends and reserves. So who got the dividend? Who gets the first? Now, did you transfer anything to the reserves? No, nothing was transferred to the reserves. It's nil in 2008. But did we pay the dividends? Yes. Who gets the dividend first? Preference shareholders or ordinary shareholders? Preference shareholders. So preference shareholders got a dividend of 5% on 100,000. 5% on 100,000, 5,000. Ordinary dividend was, here it's given. In 2008, it was 6%. So they got 6% on 200,000 ordinary shares. So they got 12,000. See, ordinary shareholders, though riskier, in case of good times of a company, they get more profits than the preference shareholders. So total 5,000 plus 12,000, 17,000 was given as dividends. 35,000 profits minus total dividends, you are left with 18,936. These are the retained profits which will be carried forward to the next year. Retained means the profits kept by the company. Now, let's move to 2009. What was the net profit for 2009? 40,728. So there's a net profit. Add retained profits brought forward from last year. Last year, the amount of 18,936, you did not distribute it. So now add it to previous year's profit. Add the previous year's retained earnings to new year's profit. So 40,000 plus 18,000, total amount of profits available are 59,664. Less appropriations. Now, did you transfer anything? Yes, in 2009, we transferred 20,000 to the general reserve. So less appropriations. First appropriation is transfer to general reserve. So 20,000 we took out of our profits of 59,000. Then we paid the dividends. Again, preference dividend holders will be paid, preference shareholders, will be paid before the ordinary shareholders. Preference shareholders, if you see, are paid the same amount, 5,000. See, 5,000, 5,000, 2008, 2009, it's constant. Then ordinary dividend is how much this year? 8%. It's more than the last year, 2% more. So 8% of 200,000, 16,000. So all of this transfer to reserve, preference dividends, plus 16,000 of your, so 20,000 plus 5,000 plus 16,000. This is the amount of money that you are going to pay. 41,000 you are using out of your total profits of 59,664. Now subtract 59,664. Your answer is 18,664, which you are left with this year. So after making all the distributions, you are still left with 18,000 out of your profits. Now moving on to the last year, 2010. The net profit for 2010 is 47,500 here. Again, add retained profits from last year. Last year's profits are 18,664. So this year's profits are 47,500 plus 18,936. So your total amount of sorry, not 18,936. Wait, 47,500 plus 18,664. So 66,164 are the total amount of profits. Out of these profits, now you're going to distribute funds. Again, reserves. Did we transfer anything? Yes. In 2010, we transferred 25,000 to the fixed asset replacement reserve. It means out of our total profits of 66,000, we are putting 25,000 separately. Why? Because we're going to use this 25,000 to replace one of our assets. This is a specific reserve we have created. So first transfer 25,000, then pay again the preference dividend, same 5,000. But this year, the ordinary shareholders are getting 10% of their investment back. So 10% of 200,000 is 20,000. So how has the profit been distributed? 25,000 goes to the asset replacement reserves. Asset replacement reserve. I'm sorry, wait. Yeah, okay. 25,000 plus 5,000 for preference shareholders plus 20,000 for ordinary shareholders equals. So total 50,000 has been used this year out of your 66,164. 66,164 minus 50,000 gives you 16,164 left as your retained earnings carried forward to next year. This is how we make the appropriation account. Hope you guys have understood what I have been trying to explain here. Please go over these slides again, and remember this exhibit is basically from your book. The page number is 258, 259. So this exhibit is from pages 258 and 259. You can go over the exhibits if for more clarity, and you can please listen to the recording again so that you are clear as to how to make the profit and loss appropriation account for future references. Thank you very much for your time. Bye guys.